All right. Good morning, all you magnificent melon heads of the world. I hope you guys are well. Happy Monday, everybody. Today's May 6th, 2024. And the top story this morning is a company called Steward Healthcare. Now, I've been doing some DD on this one for a while now. If any of you guys, any of my magnanimous Melonhead channel members or my Patreon supporters, if you guys have been on our Zoom calls that we've been doing over the last few weeks, you've probably heard me talking about this one. A company called Steward Healthcare. They just filed for bankruptcy this morning. I want to tell you a little story about some of the research I've been doing. I was in the process of getting a video together about this, and the story blew up before I could get that video produced. But shown here in this picture, this is a woman named Sungita Rashid, and she had just given birth to her baby daughter. There's her husband there in the picture. And soon after her daughter was born, the complications started, and she needed an emergency procedure. She needed this device. This is a coil embolizer. Don't ask me what it does. I'm not a doctor. I don't know. All right. But Sungita Rashid, shortly after giving birth, she started to have complications, and she needed a coil embolizer. And the hospital that she was at in Boston, a Steward Healthcare hospital, didn't have this relatively simple device because every single one of them at the hospital had been repossessed by a vendor several days before Sungita gave birth. And so, since they didn't have the equipment they needed to save her life, they decided they were going to transfer her to another hospital, and an hour later, she died. And the reason why those coil embolizers got repossessed is because Steward Healthcare, the owner of that hospital, didn't pay the vendor, and the vendor repossessed them all. And that woman died because they didn't pay their bills. And this is the yacht of Steward Healthcare CEO Ralph De La Torre. He bought this in 2020, shortly after the doctors that ran Steward Healthcare bought the company from Cerberus Capital, who officially exited from their position in Steward Healthcare, quadrupling their money in 2020. And after taking control of the hospitals, those doctors that now own the company paid themselves a generous $100 million dividend, $40 million of which Ralph De La Torre used to buy this yacht. But one thing they didn't use any of that money for was to pay the bill for the coil embolizer that Sungita Rashid needed after giving birth. So she's not here. And I've been following this story for weeks. I've been working on it, and it's made me grind my teeth. And these people at Steward Healthcare and Cerberus Capital and Medical Properties Trust, the companies that are involved here, are vampires who have been sucking the life out of dozens of hospitals, not just in Boston, not just in the United States, but across the world. They did this in Malta too. Shout out to my buddy Brian Zarb I've been talking to over there about this. These guys have been just sucking money out of hospitals themselves, bleeding them dry, letting the facilities deteriorate, letting the conditions run down, not paying their vendors, not paying a lot of their doctors, closing hospitals as they go bankrupt. All the while, they have been getting rich. And I'm telling you, the communists and the socialists smell this like blood in the water. They are absolutely loving these stories. They're going to try to use this as an example to get single-payer healthcare passed, which, I mean, if you think these guys are bad, just wait until you turn this whole thing over to government bureaucrats. Well, Steward Healthcare has finally filed for bankruptcy this morning. It's been a long time coming. These guys have just absolutely looted these hospitals dry. It all started in 2010 when Caritas Healthcare was bought by Cerberus Capital Management, was a hedge fund. Cerberus created Steward Healthcare out of that. And then in 2016, Cerberus Healthcare, along with Steward, signed this massive sale-leaseback arrangement with Medical Properties Trust, where they basically, Steward owned the hospitals. They owned them free and clear. And all of a sudden, in 2016, they decide they're going to sell all the hospitals to this real estate investment trust and then rent them right back. So, yeah, they got $1 billion, hundreds of millions of which the owners paid themselves in the form of dividends to go buy their yachts. But now the hospitals have these massive several $100 million a year rental payments that they have to make to Medical Properties Trust. And while those rental payments bankrupted the hospitals, there was no money left for anything else. And of course, the conditions just deteriorated. And finally, after years of bleeding these hospitals dry, they're finally entered Chapter 11 today. I've just been shaking my head for weeks researching this. I've talked a little bit more about this on our Patreon Zoom calls. Finally coming to a head today. Full disclosure, I have a short position in Medical Properties Trust because of the research that I've done on this one. So, just throwing that out there. Also going on this morning, we got earnings from Spirit Airlines. Spirit's not doing so good, guys. The budget airline, they had that deal with JetBlue that just fell apart. But you know what? We're seeing budget hotels not doing so well. We've seen that in a couple of the quarterly reports. Now budget airlines not doing so well. Spirit down big this morning, about 6% on declining revenues. Declining revenue per available seat mile. I mean, all the metrics at Spirit just not looking very good. We also got Rue 21 has filed for bankruptcy. The apparel retailer, they own 540 stores across America, and they are closing every single one of them, just shutting down operations. I don't know how many jobs that is, but I'd imagine 540 stores. It's got to be a couple of thousand jobs at least. All those part-time retail jobs, they'll be going away. We've got Macquarie Bank in Australia is going cashless. Uh-oh. Is this a CBDC precursor? A bank with no money? Let me ask you this. There's a bank and there's no money in it. Is it a bank or is it just a building with computers and glass? I mean, they don't even have vaults anymore. What is the point of a bank with no money? Well, Macquarie Bank in Australia, they are going full cashless. You'll just have to transact digitally if you want to do business with that bank. I am really glad I am not a Macquarie Bank customer. If I was, I would be getting my money out of that bank. I'm not telling you what to do with yours. I'm just saying what I would do with mine. Tyson Foods reported a pretty substantial decline in their chicken sales today. Although beef and pork were up when they reported earnings, Tyson's net sales overall were down about 0.5%. So some interesting things going on in the foods market. Remember, Tyson, that's one of those companies that has been closing down the food processing plant, laying off a lot of people. Well, their sales were declining. It looks like it wasn't quite enough to save the company. So we got that going on this morning. Other than that, it's a pretty quiet morning. Why don't we shrink my big melon of a head and let's see what's going on in this market. And I didn't share my screen yet. I am remiss, guys. Oh, my. There we go. Let's make sure you can see it. Oh, no, not that. That's not the shot I want. That's the shot I want. There we go. All right, the S&P 500 is up 20 points or 0.4% higher this morning, slightly in the green. We've also got the Dow is up about 0.4%, 153.8 points in the green for the Dow. And the NASDAQ is also up about 0.4%, well, 0.33%, a little less, 60 points higher for the NASDAQ. So stocks are up pretty much across the board this morning. We've got a lower Dixie. Not sure what happened a few minutes ago here, right around 8 o'clock, but the U.S. dollar started to weaken here, currently down 14 basis points at 104.89. The Dixie really weakened last week on the news of that jobs announcement. We had fewer than expected jobs produced and that non-farm payrolls report last Friday. What was the headline number? It was like 175,000 jobs, I believe was the headline number. That fewer than expected jobs produced had people thinking the Fed rate cuts might get here a little bit sooner. So the dollar started to weaken, interest rates started to drop, and people started to reprice expectations. Maybe we will get that first Fed rate cut as soon as September. And looking over at the bond market, we got yields are mostly lower this morning ahead of the open. The 30-year Treasury, 4.646%. That's down 1.5 points. The 10 years at 4.485. That's down about 1 point. The 2 years at 4.80, down 0.5 point, and the 1 month sitting pretty at 5.385. Looking over at the commodities board, we have got gold is higher by a full percent this morning. June gold futures are up $23.45 at $2,332. Look at the morning silver's having. July silver futures at $27.48, back above $27, up almost 80 cents or 3% higher. Congratulations, stackers. I like the shiny. But watch that all-important $28.30 level. That has been the resistance that we failed to break through a few weeks ago. So we're still a ways below that, but heading in the right direction this morning. We've got platinum is up about 0.75%. We got palladium is up 3%. Palladium's having a good moon. Look at the futures, June futures and palladium, $979, up $30 this morning, 3.25% for palladium. And crude oil, June WTI futures at 78.76. That's up about 65 cents this morning, or about 0.8. So we've got commodities across the board looking a little stronger, weaker dollar, higher commodity prices, not too surprising there. And looking over at Bitcoin, we've got Bitcoin was up this morning, but it's down a little bit now, although up from where we last spoke on Friday, currently down $367, but trading at $63,670 on Coinbase. We recaptured this level around 60,100. That had been support several times in a row, broke below it, but now we're back above it. But if we zoom in a little bit here, you will notice that Bitcoin failed its 50-day moving average there, came right up to it. We were a few bucks short of it. So we'll keep an eye on that one. And speaking of Bitcoin this morning, this is an interesting story. Grayscale Bitcoin Trust shares jump after the first inflows since January. Now, if you guys have been following this, we have seen the Grayscale Bitcoin Trust has seen just massive cash outflows. They have higher fees than all of the other Bitcoin ETFs. So a lot of people have been selling the Grayscale ETF and buying the ones that have the cheaper fees. That's caused a big decline in the share price of Grayscale. It was actually trading at a decent discount to net asset value. And it looks like there was a little bit of flow back into that. Shares of Grayscale Bitcoin Trust jumped 5% in pre-market trading on Monday after the ETF that tracks the price of Bitcoin saw its first day of inflow since January. The move marks a major milestone for GBTC, which has seen $17.5 billion in withdrawals since it converted from a trust to an easily tradable ETF in January due to the higher fees it charged compared with its rivals. So GBTC is up 2.5% this morning after being up about 4.5% on Friday, trading at $56.68, up $1.36 this morning. So here is the story of the hour. Medical Properties Trust tenant Steward files for bankruptcy protection. Once again, guys, full disclosure, I am short MPW. That's Medical Properties Trust. Hospital chain Steward Healthcare, a tenant of publicly traded Medical Properties Trust, said it's filing for bankruptcy protection. Okay, that's not a complete sentence, but thank you, MarketWatch. Steward, the largest U.S. physician-owned system, said it's finalizing the terms of debtor-in-possession financing for Medical Properties Trust for initial funding of $75 million and up to an additional $225 million upon satisfaction of certain conditions acceptable to Medical Properties Trust. Now, this was kind of interesting because, again, I've been following this one for a couple of weeks. Steward Healthcare owes more than $50 million of back rent to Medical Properties Trust. Remember, Steward bought the hospitals and then sold them to Medical Properties Trust and then leased them back. And it was that sale-leaseback arrangement that bankrupted all of these hospitals. Well, they already owe them tens of millions of dollars in back rent. And then late last year and early this year, Medical Properties Trust made several large loans to Steward Healthcare to try to keep them alive. And it looks like now that they're filing for bankruptcy, it looks like Medical Properties Trust is going to give them even more money, $75 million up front and up to an additional $225 million. So Steward Healthcare has already basically bankrupted these hospitals. They've sucked all the money they could out of the hospitals. They helped themselves to $675 million worth of COVID grants during the vid. And now it looks like Medical Property Trust shareholders is the latest batch of people that they're going to rob, loot, drain the life out of because they have been just looting Medical Property Trust shareholders for everything they can. And, well, it didn't save the company. Medical Properties Trust shares sunk 10% in pre-market trade. The concern over Steward's situation and its difficulty in paying rent has dogged the company, whose stock is down 52% from its July highs, but it's up 67% from its January lows. The Wall Street Journal reported that one Steward hospital in Florida became infested with bats, and garbage collectors cut off another in the state's over the state's unpaid bills. Steward operates 30 hospitals in 8 states. They also operate several hospitals in Malta. By the way, those hospitals that they bought in Malta, the politicians, a former prime minister and a former health minister that were involved in the sale to Steward, they have had their assets seized by a Maltese court because they embezzled money from the hospitals to grease the wheels to get the deal done with Steward. I mean, these guys are crooks any way you look at it. Medical Properties Trust is due to report first quarter results on Thursday. I'm sure those are going to be just great. And guys, just to give you an idea of how bad things were, we talked about that story with Sangeeta Rashid, but here's another one that I found in my research. This was a posting on Facebook showing The sink in this old woman's hospital room. Somebody posted this. She says, my grandma is in the ICU at Rockledge Regional for a stroke, and the sink in that room, 4 feet away from her, is full of standing black moldy water, and her entire room smells like sewage. Any idea who I can call and complain to? It doesn't sit right with me that the most medically fragile patients, this is in the ICU, guys. The ICU, like the most critical spot in the hospital, and there are sinks backed up with raw sewage while you've got people with like freaking open chest cavities in the same room with them. That is how bad things have gotten at this hospital. But again, the CEO, here's his yacht. All right, this Ralph De La Torre, the CEO of this company. This is his boat. All right, and he's got several boats, by the way. He's also got several jets. But this is the company that can't pay its bills, but the CEO makes enough money to go drive around on this thing. Look at what's going on inside the boat. This is the living room on his boat. Guys, this isn't his house. This isn't his mansion. This is inside his boat. Look at some of these pictures. There's the dining room on his boat. There's the lounge. I guess there's a living room and a lounge on the boat. There's the stateroom. There's the office, presumably where Ralph De La Torre works tirelessly to provide quality medical care to all the patients at Steward Healthcare's hospitals. You guys get the point here that these guys are vampires, that this is a private equity firm, bought up this hospital, sold it off to a real estate investment trust for this big sale-leaseback agreement. The executives paying themselves hundreds of millions in dividends left and right. All the while, the hospitals aren't getting paid. The vendors aren't getting paid. The conditions are deteriorating, and patients die. That's the thing. Patients actually die at these hospitals because equipment was repossessed, and the freaking doctors didn't even know until they went to operate. And of course, they had to transfer the patient to a hospital that did pay its bills, that didn't have their equipment repossessed, and a woman died while she was waiting. Raw sewage in the sinks, bats attacking patients, ICUs having to be evacuated because the elevators didn't work, creating a fire hazard, and the elevator company wouldn't work on the building because they hadn't paid their bills. Stories like this all over Steward Healthcare's hospitals. Well, they're finally going bankrupt. Good riddance. And Medical Properties Trust, which is the landlord to all these Steward Healthcare hospitals, they're down 11.3% pre-market right now. Steward Healthcare represents about 20% of their revenue. And I use that term lightly because Steward doesn't pay their rent. And, well, Medical Properties Trust, that stock is hurting. Again, full disclosure, I am short MPW. All right, let's talk about Spirit Airlines because their stock is sliding this morning also after posting a wider than expected first quarter loss. Spirit Airlines stock fell 6% early Monday after the discount carrier posted a wider than expected first quarter loss as it refocuses on its future as a standalone company following the ending of its planned merger with JetBlue Airways back in March. The company posted a net loss of $142.6 million or $1.30 a share. That's much wider than the 103.9 that they were expecting, or 95 cents a share. The airline's adjusted per share loss was $1.46, wider than the 145 consensus. Revenue rose 0.7% to $1.47 billion from $1.46 billion a year ago. The numbers met Spirit's own expectations despite 230 basis point headwind from deferred recognition in earnings. And also they're having issues with the Pratt & Whitney engines on some of their aircraft. Pratt & Whitney, which owns RTX, said last year that some of its engines would need to be removed from service for inspection after it discovered a rare contamination in powdered metal used to make certain engine parts. The competitive environment remains challenging due to elevated capacity in many of the markets we serve, said Spirit's chief executive Ted Christie in prepared remarks. Bad weather and delays related to air traffic control, especially along the eastern seaboard and in Florida, along with civil unrest in Haiti, weighed on this quarter. The company's load factor fell 0.1 points to 80.7. Total revenue per available seat mile came to 9.38 cents. That's down 8.2%. That's a big one right there. Revenue per available seat mile is one of the more important statistics with airlines, and that being down 8.2% just goes to show you their margins are really getting squeezed. Total revenue per passenger flight segment fell 8.1%. Fare revenue fell 16.3%. Non-ticket revenue was down 1.4%, and operating costs total $1.47 billion. So Spirit is really hurting here, guys, and we've kind of seen Discount hotels were not faring so well. We saw that in the Hilton numbers. Their luxury brands were doing really well, but the lower ticket ones, those weren't doing so good. We saw that with a lot of other low tier hotels. Who was it else? I think it was MGM Resorts. One of the other big hotel operators reported that their more budget hotels were seeing big declines in residents. Now we're seeing budget airlines showing the same thing. It's the bifurcation in the economy. The poorer consumers are not traveling. They can't afford it. Luckily they got a vacation last summer, apparently. Taylor Swift and Swiftonomics that happened last summer. It looks like that's not going to be here this summer. Although the luxury travel brands, the luxury airlines, they're still doing just fine. Now, one other thing I want to note about Spirit here, I saw this in another article in Spirit. They're saying last month they reached a deal with plane maker Airbus to postpone all aircraft deliveries scheduled for the second quarter of 2025, and they plan to furlough about 260 pilots. Now, this is interesting because this is Airbus deliveries that they're deciding to delay. Now, a lot of people have left comments saying like, hey, maybe Airbus will see a lot of benefits from all these delays in Boeing planes. They can't get the 787s made. The 737s are being slowed down. But it looks like this isn't just a Boeing deal. Here we have Spirit not canceling, but delaying aircraft deliveries from Airbus. So it looks like even Airbus is not insulated from all of this. Spirit Airlines stock right now is actually just about even, trading at $3.70, down a paltry 1 cent ahead of the opening bell. So Spirit clawed back some of those losses from this morning. And in another bankruptcy story, we got this one in Retail Dive. In its third bankruptcy, Rue 21 plans to shutter all locations. The apparel retailer massively downsized as it emerged from Chapter 11 back in 2017. This time, more than 540 stores will close for good. Last year, Rue 21 hired a new CEO, former GNC executive Josh Barris, who garnered apparel retail experience from stints at Abercrombie & Fitch, Hollister, DKNY, and so many others. In court documents on Thursday, though, the retailer painted a different picture, saying that recently they had suffered operational losses stemming from, among other things, underperforming retail locations, the continued growth of online shopping and industry competition, inflation and macroeconomic headwinds, and difficulties raising capital in an amount sufficient to meet their liquidity needs and fund operations. The company has assets of between $100 and $500 million and liabilities of the same range, according to its voluntary petition with the court. So this is Rue 21's third bankruptcy in about, 15, 20 years, the third time they post bankruptcy. They're not even trying to restructure here. They're just going to straight up close all 540 stores. No word again here on how many jobs that are going to be lost here, but it's going to be in the thousands, obviously. So now you've got discount apparel retailers also going under. Again, the health of the U.S. consumer. Now, Rue 21, this is kind of a mall stock, right? Malls obviously not doing very good. So brick and mortar retail has had problems for decades. That's not necessarily a new story. But with this ongoing commercial real estate collapse and with the higher interest rates, all of these retailers, their debt is coming due. They have to refinance into higher interest rates, and they can't afford to do that because the debt service cost payments go up. So I don't think Rue 21 is going to be the last of the big bankruptcies that we see in retail. And I got this one coming out of Australia. Shout out to G.I. Rye, who sent me this one on Facebook. Macquarie Bank to go completely cashless this month. Get ready, guys. Those central bank digital currencies, they're coming. They are walking them out slowly. An Australian bank will go completely cashless from later this month as it switches to fully digital offering. A bank with no money is just a building, guys. It's not really a bank anymore. But Macquarie Bank customers will no longer be able to use cash at its branches from later this month as part of its transition to a fully digital model. The bank first announced in September last year that it would phase out cash and check services across all its banking and wealth management products from January to November of 2024. Cash and check services, deposits, and withdrawals may not be available at Macquarie offices for May 20th, 2024, the bank said at the time. So you can't, not only can you not withdraw cash, you can't even deposit cash. So if you're a Macquarie Bank customer and you run a cash business, how are you supposed to make deposits? How are you can't. Unreal that they're doing this. For May 20th, customers will also be unable to order a new check or deposit book. Phone banking services were ended at the start of March, Instead, you'll be able to make payments digitally, a safer, quicker, and more convenient way to bank, Macquarie said. Yeah, very convenient that they're holding your cash hostage, that no matter how hard you try, you can never physically get your money out of a Macquarie bank ever again. Not telling anybody what to do with theirs, but no thank you. All right. Nobody special will not be doing business with any bank that refuses to deal in cash in any way. I don't want that much digital control over my life. I've got enough to begin with. Thank you. Tyson Foods beats profit estimates on cost control efforts, but sales slip. This one just hitting the tape this morning also. Tyson Foods surpassed Wall Street expectations for second quarter profits on Monday as it began to reap the benefits of shutting some chicken processing plants to reduce costs. Shares of the company rose 3.5% pre-market after gaining more than 15% so far for the year. The biggest U.S. meat company by sales has shuttered 6 U.S. chicken plants since the start of the year, laid off corporate employees, and announced plans to close a pork plant in an attempt to rein in costs. And that helped it post adjusted earnings of 62 cents a share for the second quarter, compared with average analyst estimates of 39 cents. However, they've been grappling with slowing demand over the last few quarters as price-conscious customers cut back on expensive purchases and look for affordable options amid still high food prices and borrowing costs. So inflation has really been hurting Tyson. A lot of lower income people are just eating less meat, and it's hitting their bottom line. So they've been closing plants. Their net sales fell 0.5%. Now, there are some interesting numbers in here within this. And also keep this in mind in the context of the budget airlines not doing well, the budget hotels, the budget retailers. They're saying sales of the chicken segment, which struggled with excess supply during 2023, were down 8.3% in the quarter, even though prices fell 2.1%, but volume dropped 6.1%. So not only did chicken prices go down, but they still sold less of it. And overall sales in chicken were down 8.3%. So people are buying a lot less chicken this year. But interestingly enough, on the other hand, they're saying volumes at its beef segment, which is its largest, grew for the first time in 5 quarters, logging a 2.8% increase. And the company's pork segment also saw volumes increase by 2.9%. Now, that's all the detail that they gave us in their beef and pork segments. So what they're saying here, volumes are up. All right, so they're not saying prices. So this is adjusted for inflation. This is actual volume of beef and pork are both up 2.8, 2.9% respectively, even though volume in chicken dropped 6.1%. So beef and pork generally a little bit more expensive than chicken. So it's a little, it doesn't quite fit with the inflation squeezing consumers narrative to see beef and pork doing better while chicken is hurting so much. I'm not saying that's a new trend or anything, but that stuck out at me as one little anecdata that doesn't quite fit with the narrative this morning. So I wanted to point that one out to you guys. Sales in beef and pork on the rise. I haven't seen that anywhere else. I know I got some guys that work in farms and work in the meatpacking industry that follow this channel. Are you guys seeing anything similar? Let me know in the comments down below, because that one kind of stuck out at me as odd this morning. But Tyson Foods, ticker TSN, they're down a little bit this morning, about 1.5%. Looks like the opening bell just rang, trading at $61.09. And the last one I want to talk about this morning, guys, I got this from Macro Edge on X last night. I have not been able to confirm this story, but I can tell you Macro Edge has been excellent in their coverage of what has been going on in layoffs throughout the market. And apparently Tesla is undergoing another massive round of layoffs, potentially affecting another 10,000 plus employees. And as far as I can tell, this is on top of the thousands of layoffs that have already been announced this year, on top of the layoffs in the Charger division, Tesla cutting more people. Again, I haven't been able to confirm this, so I'm still going to chalk this one up to as a rumor, but a pretty reliable rumor. Macro Edge has been really good with their job cuts data lately. They've been the first to report big job cuts elsewhere in the markets. They've had it before anybody else. So I feel confident in reporting this one to you guys. Tesla stock right now up 1.5% this morning, trading at 184.04. That's up about $3 ahead. Well, after the opening bell. So again, I haven't been able to confirm that one, but looks like thousands more layoffs coming over at Tesla. And for some reason, these comments are not, you know what? This is not letting me update my super chat comments. I am sorry about that, guys. I saw a couple of you left super chats. Here's Dan Hedin. He says, but Biden said the economy is good. Yes, it's the best economy ever, Dan. Companies going bankrupt, companies laying people off. Look, it's not, unemployment is still generally pretty low. It is rising. The jobs numbers are highly suspicious. But no, it's not the best economy ever. I mean, people's wages haven't kept pace with the rate of inflation. We're seeing it in consumerism. The low budget consumers are not doing well. The lower budget retailers are going out of business. The lower budget hotels see a lot of empty rooms. Lower budget airlines are seeing fewer people booking flights. So no, it's not the best economy ever, although I am picking up a little bit of sarcasm in that comment. Thank you very much, Dan. I appreciate the super chat, the support of the channel. And thank you, Mike Pons, your America First candidate. Okay, Mike's running for office. I don't know what office Mike is running for, but good luck, Mike. He says, ask a vet how the Veterans Administration is working for them. Single payer won't work. I've heard mixed things, Mike, about the VA. Obviously, there was a lot of stories about bad things at the VA a couple of years ago. I haven't necessarily heard a lot of bad things about the VA recently. That being said, I am not crazy about single payer. I am not about to get behind that. Any industry where the government has absolute control, like just look at how they run the motor vehicle agency or the DMV. All right. Do you want your doctor's office being run like the DMV? I don't. All right. So yeah, I am not a big fan of the single payer healthcare. Hey, look, they got single payer healthcare in Canada. It works so well that medical assisted suicide is on the rise. And they're like, wow, medical assisted suicide worked so well in Canada. Maybe we could use this as a treatment for poverty and homelessness. And apparently there was a poll I saw that like 1 in 3 Canadians thinks that medical assisted unaliving oneself. I probably got myself in trouble just by using that S word, but medically unaliving yourself, 1 in 3 Canadians supposedly believes that's a appropriate treatment for homelessness now. So, wow, that's humane. Just put them out of their misery, huh? I love what you've done with the place. Canada, things got dark up there. What's going on up in Canada? Oh, my God. Thank you very much, Mike Peons, though. Appreciate the super chat, sir. And I am getting messages left and right here. Oh, thank you, Mish, is helping out with the super chats that came in here. I got to scroll up to find them. Here we go. Thank you, Wonder, she, her. She says, I can't tell you how much I appreciate the healthcare watchdog content you include in your overall daily reviews. Thank you. Well, you are very welcome, Wonder. It is my pleasure. Again, I wanted to have that video done about Steward, man. We've been talking about that in the on the Zooms with Patreon and the channel members for the last couple of weeks. I was kind of expecting this. It got here a little sooner than I thought. But yeah, that story really very upsetting what's going on at Steward Healthcare. And I'm telling you guys, the capitalists, we got to start policing this stuff because this story is going to be plastered on every TV screen. The next time they try to take over healthcare, they're going to talk about these guys. And well, it just doesn't do anyone any good. And also, thank you, Cole Marsh. He says, have a silver day. Love you. Right back at you, Cole. Thank you very much, sir. I appreciate the super chat and the support of the channel. And Dan is back again. He says, looks like someone is having a case of the Mondays. Oh, yeah, Jack is definitely having a case of the Mondays. I'm a little tongue-tied this morning. I'm about as sharp as wet leather. It was a long, rainy, cold, muddy weekend, and I was out doing yard work all weekend anyway, so I guess I'm not my typical chipper self this morning. You noticed that, did you, Dan? Thank you, sir. I appreciate the super chat and the support of the channel. And I think I got everybody, guys. StreamYard's being a little wonky today with the super chats, and it's not letting me flash them in front of the screen as easily. I think I got everybody. Did I miss anyone? I don't want to miss anyone. Well, if I missed anyone, I will get to you guys tomorrow morning. I don't think I did. But thank you, everybody, for having your coffee with the Melonheads. Don't forget that like button on the way out and subscribe if you haven't already. If you're new here, we do this every morning. Thank you to all my channel members for all supporting the channel and for my Patreon supporters. Thank you, everybody, for the super chats. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.